I learned to read price action in the trading pits in Chicago, and price action does reveal clues. It's our job to interpret what the market is telling us. Markets have tendencies when they trend, and they have tendencies when they're making highs and lows. There are common types of profiles, which are in another video called profile types, but there are neutral type profiles that occur near highs or lows. It's common to get what's called responsive activity, and that is as the market's rallying, before it reverses, you start to see highs made early in sessions and lows made late in sessions. And when it's making lows, you tend to see lows made early in the day and highs made late in the day. You tend to see closes above high volume prices when markets are bottoming and below high volume prices when they're making tops. Another hint that a market may be making a low or a high could come from the spreadsheets that accompany each macro graph. In particular, I'd like you to pay attention to the time at price and the range. If the time at price is far above average and the range is far below average, there is a tendency for markets to reverse when that instance occurs. This chart illustrates all the data that was on that spreadsheet, and I'd like to concentrate on this 1 week here where we had a below average range and above average time at price, and that occurred right before the market took off for a huge rally. And while we're at it, when you're looking for a short, fat bell curve, it's probably going to occur after a market's had a far above average range and below average time at price. This is one of my daily worksheets of the Dow Mini Futures. And what I'd like to point out here are simply just the type of days that occur before a market reverses. Here you have 2 neutral days before the Dow took a big hit. And let me show you what that looks like in a weekly profile. Here's that very same week we were looking at, but made into a weekly profile, and you can see here that the range is far below the average and the time at price is far above the average. Again, this is common before a market makes a reversal. One of my favorite features of MacroGraph is that we can make custom profiles, and here we're looking at the stats for 3-day profiles for the mini S&P. I've highlighted 3 of those 3-day profiles to take a look at to show you how what they look like before a market reversed or made a move. So here in this first profile, you can see that we had above average time at price after an elongated move or a good rally. That told us that the market was about to reverse. Market's not facilitating trade anymore. And again here we see a very normal bell curve before the market turned around and headed south. And then again in this last one we see an above average amount of time at price within a below average range before the market reversed again. So even custom time frames can give us hints when markets are ready to roll over. Here's another example using 3-day profiles with silver. What I'd like to point out here are the profiles that show above average time at price. And these profiles were precursors to rather large moves. The types of profiles that reveal change don't only occur by day or week, they occur in any time frame. Here we're looking at monthly profiles for Japanese yen, and you can see before that market broke hard we had a very normal short fat bell curve, and the same before it made a low and reversed. Not only did that happen by month, but here we are looking at Japanese yen by quarter. And you can see for 2 quarters in a row, this market wound up pretty tight before it went on a huge dive. So looking for these short, wide bell curves can help you with timing reversals.